But all right, let's get started here. So, if you guys are just coming in, what we're going to be going over today is my pivot strategy. It's not based on standard pivots that you would typically see when people talk about pivots. Um, I just call it pivots because I don't really have a better word for it. But what my pivots are based on is when we see areas of support or resistance showcased by multiple wicks in the same zone. So we're actually seeing a pivot system right here currently. So this is perfect timing on this video, where you see a wick up here, right? So let me zoom in. We see a wick up here, right? On this little push up, we see a wick up. So what do these wicks tell you? These wicks tell you that buyers were not able to keep price at this level, at like 175, 174 above. Buyers did not believe that this was a good price. They did not want to buy here. And the buyers that did buy here, they got trapped because there were more sellers than there were buyers. So when we see these wicks, we have to ask ourselves, why is it wicking there? What's happening? Why is the market not buying that? So if we see that the market does not want to buy that, we're going to want to wait to give the market another chance. Because maybe it was just a little bit of profit taking, some pressure, and the sellers just push it down a little bit. But there's still plenty of buyers that want to buy this. So you want to always give the market a second chance. So when the market tries to take that pivot, tries to take that wick, but fails again, that should be clear to you that this little zone here is resistance. The sellers are pushing the buyers down. Price is resisting this section here. It will not go higher. There is too much supply here, not enough demand. So people are taking profit here. They're selling off their initial buys from this pump. But people are not entering into new buys here. So what we want to see is we want to see that failure of that first wick. We want to give them a second chance to try to break through that zone, that pivot. If they fail to break through that pivot, that's when we're going to want to look to start shorting this move. So like right here, once it pushed through, I typically place my bids on the 50% of the wick and the high of the wick if I'm shorting. So for this, you would have placed your bids at the 50% and the high. And your stop loss is 1% above the high. So you'd be shorting here. You would have got filled on half your order. You would not have got filled on the other half. And then you're just targeting previous levels based on your style of trading. So it's very simple. You just look for areas that are wicking on multiple candles. This creates your pivot. So if you wanted to be more precise with this pivot, you could bring it down to these wicks. You can see that it's wicking these highs here. So once we wicked above it and came back down and failed, that is a short signal because you are failing to break that resistance pivot. You are failing to make a new high. The higher the time frame on these, the better. Because if we go to a lower time frame, we can really see what's happening here. It pushed high up, failed, had a nice little gravestone here, began to consolidate, ranged, tried to push upward and break that high, but it failed. So you would be shorting that failure. This one would be a little risky, obviously, because you're shorting right after a major impulse up. But that's why it's a reversal strategy. You're going to have good R to R, but you're not going to win every single trade. So that would be a setup for the high side. For the low side would be the same thing. So let's take a look at these two pivots here. So right here, what do we see? Let me zoom in a little bit. So right here, what do we see? We see that there was an attempt to push lower. Price is going lower here. You're trying to make new lows. You begin to wick, which is showing you that the sellers do not want to sell that low. But then when this candle opened here, you were able to break that low and you pushed lower into new lows. But then look what happened. The sellers were not able to keep that price down at that range, down to the 156 range. So you pushed all the way back up, giving us this little pivot here, this area of multiple wicks. So we would look at this area as our pivot. This is our support. So what do we look for? We look for another test of that support, another test of that pivot. You want to always give it another chance to see if it will break through into new lows or new highs. So we see it attempt here, and it acts as strong support, and we were able to push price up, but it didn't really get far into that pivot, so you would not have longed that. You only look to long the 50% or the low. So if we take our range here, this one you would not have gotten filled, but once it showed signs of support here, you could have gotten in on a break of structure here. So once you show a support, and then you break your structure on a nice break of that high there, if we go to a lower time frame, we can see what it looks like. Yeah, so this is much better on a lower time frame. You see the test of support, the retest of support as your double bottom, and then you break your structure there. You could even pull this up on a lower time frame. You break your structure there. So if you did not take this reversal on the pivot, you could have taken the pivot as a pivot failure because you failed to break through it. The pivot held as support, pivoting price, and you could have taken it on a break of that market structure, a break of into a new high. Let's look at some other examples here. I typically don't use this style on a lower time frame. I use the lower time frame as confirmation, but I typically don't go lower than an hourly. But let's go to like a 4-hour here, and let me go back to Bitcoin. This is the trade that we actually took on Bitcoin based on this pivot system. So what do we see here on Bitcoin? We see our initial move up, our impulse. We begin to distribute. But let's look at right where the distribution started. So the distribution began once this candle could no longer make new highs. This candle could no longer push higher. It showed signs of resistance on this wick. It showed you that buyers were not able to break price into the upside. Buyers were not able to keep pushing into new highs. So once we see that, we start to look for a reversal setup. We give it another chance to see if it's going to break into its new high. It is not able to on this wick, but we did not short this wick here. We shorted this wick. So we got in on the high, the high of this wick. Your stop loss would have been 1%. above the high, which puts your stop loss above the wick. So once it wicks up and you're already filled and it comes back down, you can lower your stop loss to wherever that wick was. So you could lower your stop loss to above the wick, which you would have got stopped out here, but you would have already taken profit on the move down. So if you put your stop loss above that wick, you enter here, you can have a very good R to R. As you can see here, your maximum potential on this trade was a 6-to-1. 5% failure for a 0.8% stop loss. I took profit on the move down to, where was it? Let me pull it up. $55.88. So 55.88 was like right there, which is almost a 5-to-1. So you have your pivot being formed here. This is the first formation of it. And then you have it tested here and created once you're unable to break into a new high. You tried to break into a new high, but you were unable to hold that new high. This system is basically predicting weak breakouts or weak breakdowns. So when you're entering in these trades, you want to set them up on higher time frames, so like the hourly, 4-hour, daily, whatever. But when you're watching the breakout, you want to be paying attention to it on a lower time frame, because you want to be paying attention to that volume and that momentum on the breakout. You want to make sure that it is not a healthy breakout. So what do we see here? We see a lot of buyers come in to break this pivot high, but then what happens? It goes up and gets completely sold off by massive sell volume. So this is not scary in any way. If you entered preemptively, you would have had a 1% stop loss. You've already accepted 1% of the risk. And as long as you're not breaking your stop loss with very high buy volume, if you're in a short, there's nothing to worry about. The breakout is weak here. The sell volume is outweighing the buy volume. You're not able to continue to make higher highs and higher lows when you're breaking that pivot. Let me go back to where we were. So we have that pivot being created. We have the first test here, actually. You could have gotten in on the 50%. So the 50% there would have filled you. The 100% retrace would not have filled you. The 50% would have filled you. Your maximum potential for that before being stopped would have been about 2.3%. Not bad on that one. But I had my order placed at the high. So you have the break of the high there, and then you get filled, 1% stop. You lower your stop to the wick once you retrace, and then you fail downward. And you can see that you actually were given another attempt here. So let's expand this pivot. If you did the same exact setup, put your entry at the top of the initial pivot, this initial wick, with a 1% stop loss. You came very close to getting stopped. It would have been like there. You came very close to getting stopped out, but once it retraced, you could lower your stop to the wick and then hold on to it for the move down. This is obviously a very risky trading strategy because you are shorting highs and you're buying lows, but that's why it's a reversal strategy. And you always maintain a very tight stop loss. You can even reverse on your stop loss if you truly believe the breakout is healthy. I'll go over that a little bit later. But yeah, so here you're given another entry on the top of that pivot, and then you fail downward yet again. And now we're entering the pivot, and we're failing even sooner. So look what this is pretty bearish if we look at this according to this pivot, because we see an initial break of the pivot, failed. We see another break of the pivot, failed. But now look at these. These aren't even breaking the pivot anymore. These are barely even making it into the pivot and failing downward. So you're starting to distribute here on your pivot. You are starting to form lower highs. So this is just confluence that this is strong resistance. Very strong resistance on that initial pivot. We are seeing higher lows being formed, so you're starting to have kind of a pennant forming. But this is proving to you that this pivot is strong resistance. I think you would have been filled if you took that 50%. Let's see. Yeah, so if you were watching this pivot, this range, you had a 50% test, almost to the dollar, and then you failed downward. So if you had your 50% order there, you would have got filled on both of these candles here. You would have got filled on this candle and failed downward, and you would have got filled on this candle, which failed downward. I don't always put one at the 50. I typically always put them at the higher range because you have much lower risk. And since Bitcoin's been so volatile lately, I've been putting them on the high side. But yeah, so that's the pivot structure for shorts. And typically, when you are trading something that's had a bullish move up, like an impulse up, if you're looking at trading the lower pivots, you want to go to a lower time frame, because right here we would be in a bearish pattern. We would be in distribution, or not bearish, but you'd be in distribution. So when you're in distribution here, you can take that into account and go to a lower time frame and trade these lower pivots. So like we see here, if you're wondering how would you have caught this move up, you can use the same style of trading. So we see the move down, right? We see that long bottom wick after that impulse down. You don't want to just be looking for like these small moves like this. So like if you're looking at why didn't I use these pivots? Because that's just a small move. You want to be looking for those impulse moves. So we see like this impulse move down. Then we see that wick up here. This is your initial creation of that pivot. You have that initial creation of that pivot there. You have your, where's my brush? You have your second attempt of your pivot there. You always want to give it a second attempt. You have that second attempt. If you had your order placed, you would have gotten filled there with a 1% stop loss. Let's see if you would have been stopped. Nope, you would not have been stopped. So once this retraced, if you entered on the low, you would have placed your stop loss above that, below that wick. And then you would be trading whatever strategy you're trading, just an R-to-R strategy. If you're targeting previous lows, previous highs, if you're targeting dojis like I like to target. This strategy does not have a target system. The target system is based on your own discretion. This is an entry system. So you would have entered here on the low. Once the pivot was not broken on the second attempt. I typically always use limits. I don't market these. You place your stop loss once it retraces below the wick. And then you target an R to R setup or whatever setup you like to target, like dojis or lows, highs. So if you would have targeted a full retrace of this impulse, you would have gotten almost a 6-to-1. If you would have just done an R to R setup and did like a 3-to-1, you would have been filled on this breakout here. But as you can see, these setups are always going to have good R to R. You're not going to have a very high win rate because they have such good R to R, but you will have a much higher win rate than you need to be profitable. I typically average about 65 to 70% on these setups. So we have that wick down, that second move. If you would have placed your order, once again, you'd be looking at the range of the wick, the 50% of the wick or the low of the wick. You see you would have been filled on the 50 easily and the low easily. Like I said, I don't typically take the 50 right now because Bitcoin's too volatile. You can take the 50 when you're trading something that's not as volatile. But if the volatility is high, you typically want to be waiting for that retrace of that initial move. So you have that move down there, and then you break out to the upside and you're filled on your take profit. So as we can see, like I said, you can trade these on lower time frames, but I typically don't. I like to look at them on higher time frames. But what do we see here? We see an impulse up. We start to see that initial wick, but it's broken. So that pivot does not hold. We start to look at the next one. Okay, so now we have another wick here. Let's take our range of that wick. You have your second attempt, is not able to break the high, and then you fail lower. You could consider this the second attempt, which does break the high, but if you have a 1% stop loss on that high, you would not have been stopped out, and then you failed down lower. So we see that initial failure. We like to see long top wicks. These little wicks don't really mean anything. That could just mean it got sold off just slightly before the candle closed. We like to see the long top wicks or long bottom wicks because those really mean that the market was being pressured downward or upward based on that level. So we see that confluence of wicks in this upper area here. 1, 2, 3, 4. You can consider that a wick. You have like 5 wicks here in the same area. So this is giving you that pivot. And you're failing downward. Same thing on these long bottom wicks here. You're just paying attention to the wicks. You want to always give it a second attempt. It's given a second attempt here. It's actually given like 3 attempts. So it's given a second attempt, is unable to break. You find support, you bounce higher, but you're unable to break market structure here. So you most likely would not have hit your targets. But if we keep going, you can see you wick these lows, false breaks. This is what you're looking for. You're looking for these false breaks, these weak breakouts of these pivots. You are unable to break that structure. These are traps. It's a stop hunt. It's hunting people who are placing their stops below this wick. You have the breaks of that wick, but you're unable to maintain. Do I still have volume? Let me pull up volume. You have these breaks of this wick, but you're unable to find sellers to push that down. You're unable to find people who are willing to sell at that lower range. And you can see, look at all these wicks. You can see all these bottom wicks coming in. And look at the volume. When you see high volume with long wicks, the volume is in accordance to that wick. So if you have a long bottom wick and you have high volume, that's typically telling you that the buyers are strong, not the sellers. It doesn't matter that it's a red candle. If it has a long bottom wick and it has high volume, that's telling you the buyers are strong. So we can see all three of these candles have long bottom wicks on this pivot, and they have high volume. So the buyers are strong. So these breaks of this wick to the downside are going to be weak. The buyers are too strong to properly put in new lows on that pivot. So this section of price is most likely going to pivot price. And that's exactly what it did. So if you look at all of these lows, if you took any of these tests, you are easily in the profit. You have a 1% stop, you're not hit. You'd lower it to the wick. And look at that, you have clearly a 3.6 to 1 before you even begin to fail. These R to R, or the R to R on these setups are going to be very good every time. They have to be because you're shorting highs and buying lows. Let's go back to higher time frames because, like I said, I don't typically use these on lower time frames. As you can see why. They become too choppy on lower time frames. If you're like an extreme scalper and you like to use lower time frames like this, then yeah, you can do it. It's just you're going to fail more often than if you use a higher time frame. So let's look at a higher system here. And I actually have a daily pivot made on Bitcoin. Let me see if I can find it again. Yeah, here we go. So the funny thing about these pivots is you can use pivot highs to long and short. What I mean by a pivot high is I mean if it's a high, if they're top wicks, I call that a pivot high. If they're bottom wicks, I call it a pivot low. You can use a pivot high to long and short. So we have a pivot high here, right? This is a daily pivot high, which caused price to fail downward. But now look what we're seeing. We're seeing a breakout to the upside, and then a retrace into that pivot high. So this pivot high is now acting as support. It's a clear SR flip. If we go down to like a lower time frame, a 4 hour, this was our pivot, our resistance, and now we're seeing it act as support. So if you were taking these 4 hour pivot highs here, and you were shorting them, let's actually not use that. It's going to be a little confusing. Let's use this. So if you're shorting these pivot highs on a 4 hour, and you're like, okay, so where should I target? Well, we have a very nice target down here. We have a pivot high that's now acting as support. So you would have shorted the highs here, shorted the highs here, and then you would have targeted the lower section of this pivot high. So the 50% and the low. You see the 50% hit there, the full retrace hit there, popped back up, you shorted the high again, 50% there, did not hit the full retrace. But now we're hitting the 50% of the pivot. You can see how we're stuck in between a resistance and a support. You can see this pivot high and this pivot high. The funny thing about this system is it's going to line up with just your typical support and resistance on highs and lows. Because just like I showed you, a daily pivot on these wicks, if you go down to a lower time frame, it's not going to look like a pivot. It's just going to look like a standard high. So people are going to be marking these levels, right? They're going to be marking, let's say they grab the high. Let's say they use my doji style. So they're going to grab the low. Let's say they just grab the wicks. You see, they're going to be grabbing all these levels, right? But if they just go to a higher time frame and grab that whole pivot, they understand where that support is. You don't have to be precise. You don't have to precisely grab all those levels. You can see by just taking that pivot that that is the zone of which we are going to bounce. Same is said for the pivot lows. They can be longed and shorted. I don't think I can find an example here on the higher time frames because we're so bullish. Let me see if I go down to like the bear market, we'll be able to see it. Yeah, so here's an example here. So what do we see here? We see, let me zoom in a little bit. We see our impulse down, right? We see that big move down here. We see the initial bottom wick. We see a second attempt of that bottom wick. It's unable to break out into new lows, creating that pivot. This is your pivot point. You went from lows into highs. You're pivoting here. You're swinging. You're making a swing low. And now let's go see. So it actually acted as support again, but then it acted as resistance. See how that pivot turns into resistance. And then you fail downward. Same thing here. That pivot acted as resistance. Same thing here. Acted as resistance. And then we finally had that clean break on that nice move up. So now let's see, is it acting as support? Yes, it's acting as support. So just like I showed you on the highs, the pivot lows can be longed and shorted. So once you see that pivot created here on these wicks, you see that second attempt, and you could long that second attempt. And you push up, push up, push up. You would not have longed this because you broke clean through it. If you would have longed, you would have lost. So there's your 1% stop loss. If you longed that low, you would have got stopped out. Once you're stopped out, that pivot is broken to the downside. So now we're acting as resistance because that support has been broken. So you would now look to short that pivot, not long that pivot. So now, as you can see, if you're shorting the highs, you're getting very good resistance points. Even if you short the 50, you're getting very good resistance points. You don't want to be shorting the bottom or longing the bottom. This pivot has been broken to the downside. What do we know about trading? If a support is broken, it becomes resistance, and vice versa. So if this is a support, it is now a resistance. And if you short something, if you short resistance, the higher up you short it, the stronger the trade is going to be, right? So like if this is your entire resistance block, you don't want to short the bottoms, you want to short the highs. You have a better chance of winning the trade if you short the highs, correct? It's like buy high, sell low. Or sorry, buy low, sell high. You want to be selling high and buying low, not vice versa. Oops. So there you can see both a long from a pivot low and a short from a pivot low. And once it's broken again, you see that clean break, not wicks. You see these wicks. You see that clean break. Now it's support again. There you go. You're testing the support. I think that is everything. The system's very simple once you understand how to bind it on a chart, which is really easy. Just look for long top wicks, long bottom wicks. I don't really see any other pivots here. We have this one here. And we have this one here. So these are your two pivot points. This one is resistance turns support, which is very bullish. We're now seeing a clean pivot SR flip, which is very bullish. As long as we can maintain above this pivot, we are still bullish. So everybody that thinks Bitcoin's going to die, they're being too preemptive here. As long as this holds, we're fine. You guys have any questions? Any questions about pivot highs, pivot lows, pivot high long, pivot high short, pivot high low, or sorry, pivot low long, pivot low short? So it's two different pivots, obviously. You have the highs and the lows, but then you can long and short both kinds. Creating them is very easy. Trading them is very easy. They have very good R to R. They have a pretty good win rate for their R to R. So like if I was looking at this on an hourly, you could take this as a pivot. It's a weak pivot. It's not very strong, but you could take it as a pivot. So you can see you had a long wick here. You formed a doji. And then you attempted to move up again and failed that doji. And then you impulsed down. So you can take that area of those wicks, those dojis, as your pivot point. So if we wanted to continue higher here on this bullish impulse, we want to see a break through that pivot. What's the logic behind using a fib on wicks versus the entire range? It's not a fib, it's just a quadrant. It's just using the 75, 50, 25, 0. It's just to mark the range. I just think it looks better than just coloring it with a box. I think that looks better than just coloring it. Yeah, but they're not based on fibs. The only two that I really look at for this range is the 50, well 3, 50, 0, and 1. So the range obviously and the 50. The other ones are there just to mark the quadrant. The other ones are there just to mark the overall quadrants. Because if you look at it, you have 4 quadrants, right? You have that upper quadrant, this middle one, and then a lower quadrant. Yeah, it's mainly for aesthetics. And then also just marking the 50% of the range. So like if you wanted to short here, and you're like, oh no, this is a fake out, I want to short this. Instead of shorting this candle right here, which would be stupid, let the market come to you. So wait for the market to push higher, and then if it fails this resistance, then you short it. You don't short here. Like, yeah, you might be right and it might fail downward, but your R to R is terrible here. Where are you going to put your stop loss? Above the resistance, right? So why don't you just wait for it to get to the resistance? Then your stop loss is tighter, and you're going for a better R to R. Every time that I start taking trades where price is currently, I start blowing my account up. And I have to constantly tell myself, stop using that damn market button and wait for the market to come to you. And my last, like 4 calls on Bitcoin have been spot on because I've been waiting for the market to get to my orders instead of just marketing. And all of my last calls have been based on these pivot structures. I can show you some few examples before I close this out. So we see this 4-hour pivot. We see the entry. This would have been your entry. So here's the creation of the pivot. Here's your entry. Here's it playing out. Very good R to R. So creation of the pivot. Entry of the pivot. Pivot playing out. There's that setup. Here is the daily pivot that I just went over. This daily pivot here, you would have longed once it found support on that pivot, or you could have longed the bottom of the pivot. And then we see it playing out here. This went a lot higher, because as you can see, this was the low. What time frame is that? The 2-hour? This is this low here. You come down and you test the bottom of that pivot, and then you went up 6% from the low of that pivot. And then once again, we see another 4-hour pivot failure here. We push up, we fail the top of that pivot and start to push downward through that pivot. You want to be looking for that daily pivot zone to pick you up, which it did. This was this failure here. The daily pivot held support, pushed you up, but since that was the upper quadrant of that pivot, it's not the strongest support, so it failed downward, and it tested the lower quadrant of that support, and then we were able to push higher. That was that pivot being tested. Oh yeah, and same thing like I went over in the beginning. We have that set up on Ethereum playing out right now. What time frame was it on? Was it on the hourly? Yeah, the hourly here. You saw your pivot being created with this wick. You saw that 50% failure, and you push downward. But like I just said on the other quadrant, since that is not the strongest form of resistance, it has not tested that high yet. That high is going to be the strongest form of resistance. That's going to be the high of the day, or the high of this range. So that's where you want to short if it shows signs of weakness. So as it approaches that high, that's when you want to be watching it on a lower time frame. You want to be paying attention to the volume. And if we're approaching that high and we start to see buyers become weak and sellers become strong, that is a good sign that it is most likely not going to break that pivot. It's not going to break that high of that resistance. And if it does break, it's going to be a trap. It's going to be stopping out people who have their stops too tight. That's why I typically put mine at 1%. Because 1%, typically if it breaks 1% of the high, it's going to continue upward. And same thing for the low. If it breaks 1% of the low, it's typically going to be continuing downward. More often than not. So if you don't care to watch if it's going to fail and you just want to put your limit there, just make sure you always have a tight stop loss, because you want to be maintaining a good R to R on these trades, because you're not going to win all of them. This is basically knife catching and trying to catch highs. You're going to be losing a lot of these trades, but if you maintain a strong R to R, you will win enough to be more than profitable. So what you want to see here, I'm not going to be able to watch it on this video. It's going to be once we're over, but what you want to see here is if this comes up and retests as high, you want to be watching the volume and the candle, obviously. And if it shows signs of weakness when it's breaking that high or testing that high, that's when you want to be shorting and then putting your stop loss at 1%. And then if it comes back down, you just lower your stop loss to above wherever it wicked. So if it comes up here and tests this high and wicks a little bit and then retraces, if you entered, you just lower your stop loss to that wick, above the wick, and then you just target a good R to R failure. Does that make sense to everybody? Do you guys have any questions before I wrap this up? All right, I don't see any questions, so I'm gonna go ahead and wrap this up. I appreciate you guys being here. If you're stopping by on YouTube, thank you for watching. Hit that like button, hit that subscribe button. If you're watching on Twitch, I appreciate you guys being here live. I will be streaming again tomorrow. I'm not sure what time. I'll keep you guys updated on my Twitter. If you guys haven't already, follow me on Twitter. It's Deja Brew Trades. Follow me on Twitch. Same thing, Deja Brew Trades. If you haven't already, hit that subscribe button on YouTube. It's Deja Brew Trading on YouTube, not trades. But I appreciate you guys being here. Thank you for watching, and I will be back tomorrow. Have a good one, guys.